Considering the situation that Italy is currently facing, would you still invest in the Italian market? Why or why not?
Yes, we have been investing in Italian assets in recent months, taking advantage of the negative volatility. For example, after the Italian elections, Italian bond yields rose because people worried about political risk. We used that as an opportunity to buy 5-year bonds yielding 3.7. In a very short period of time, those bonds have rallied, so we have been making money on those. And we think Italian bond yields are attractive because we live in a world where the central banks around the world are all easing monetary policy, and that includes the European Central Bank. The European Central Bank is sending signals that it will have to ease monetary policy over the next 6 months. This is very good news for Italian bond yields, which is also very good news for Italian equities. Italian equities are the cheapest market in the world. The price to earnings ratio is very low. Price to book value ratio is only 0.6. This is very good news for investors who are contrarian. We like Italian equities because everybody else hates them, and they're very cheap. Italy benefits from the fact that the world economy is growing. Italy is competitive. Italian exports are doing better, and so Italian equities are one of our favorite stock markets today.
Do you think that the multi-asset investment strategy is the best way to find the best opportunities in the market, and why?
Absolutely, because if you have a multi-asset portfolio and you think you can achieve diversification, it is possible to have investments that are not correlated. So for example, at the moment today around the world, there are very cheap stock markets available to you, and correlation between them is not high. So sometimes one stock market goes up, another stock market goes down. That gives you an opportunity for diversification. So what we're doing in our fund is buying very cheap stock markets around the world, like for example Korea, like for example Italy, which are not correlated. So one day Korea might go up and Italy might go down, but they don't go up together. So in a multi-asset portfolio, what you want is diversification. You want things to not be correlated. And so our strategy is very simple. We want to buy cheap stock markets around the world, which are benefiting from the fact that investors are very risk averse. So these assets are very cheap. And at the same time, equities are benefiting from the fact that central banks around the world are all going for growth, printing money, reducing interest rates. Look at what's happening in Japan at the moment. This is very good news for growth assets, for risky assets. We don't like bonds because yields are very low, and central banks are not worrying about inflation. And therefore, our bias is to own equity and to sell bond.